How much more can you lose? All the experienced investor on Twitter and all the experienced investor on YouTube are all calling diamond hands, diamond hands, diamond hands. Buy the dip, diamond hands. But the thing is, it keeps falling and falling and falling. It seems not only just wiping out the 2021 gains, it seems that we're wiping out the gains that we had in November and October. So where do we stand here? It's affecting everyone. The big question I want to share with everyone, how much more can we lose? Welcome back to Family Investment. My name is Alex Ko. I'm sure you're pretty sick of hearing the word diamond hands, paper hands, whole long term, and when is this ever going to stop? When is the barrel stopping? Because when you open your portfolio every single day, regardless it's crypto, it's stocks, it's just falling, 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 and there's no way to stop it, and you really want to see the bottom, but there's no way to be found. Doing a bit of research today, looking at all these key investors and analysts out there, I've got two key investors that's showing some signs of agreement. So Tom Lee of Fundstrat, what he's saying today on Twitter is he doesn't see the bottom for this tag yet. He likes the tag, he thinks some of the tags are good value. His clients are so interested into buying tags again, regardless of hypergrowth or the FANG stocks, because they look cheaper than they were about 6 months ago. So why not buy in? But he's hesitant because he doesn't see the bottom. He doesn't see the need of all the maximum fear. He wants VIX to be up high. He wants all that to be flushed out before he thinks people can buy in. And the second investor is Joe Terrano. It's from Virtual Investment. He sees the same as well. He likes all the tech stocks. He sees a good rebound for the next 5 to 10 years. But again, he's being defensive. He's been defensive selling his AMD, he's selling Pinterest, he's selling all the stocks that I'm buying myself. He's going to a point where he's saying, as a risk manager, as a fund manager, it's not about how much you can make or how much you can gain. When you're responsible for somebody's cash, it's all about how much you can and cannot lose. So he's managing his risk by not losing rather than focusing on the gains. This is where a lot of investor institutions are looking. That's why nobody's buying. People are not seeing the absolute bottom before they come in. So me, what's my point of view? My strategy doesn't change. My stance doesn't change. I keep a small portfolio, top 3, top 5 stocks, and now I keep a top 3 crypto stock. I'm just buying the dip. I'm dollar cost averaging. People are calling me crazy. I'm sure loads of good followers as well sending me books and lines to read up about management of money. But my stance is, I've seen this through a few times, my stance is I'm still not going to dollar cost average because I play by the rule of 80-20, the Pareto rule. I'm just going to spend 20% effort and 80% gain. So I'm just going to buy on the dip. I'm not going to bother swing trading my long key term stocks. Why? Why, Alex? Why are you so stubborn? Because let me explain my end, okay? My end, I've seen the 97-98 Malaysian financial crash almost wipe out my education. And then the dot-com bubble came in, and then the currencies of my local currencies back home went absolutely low, and the Great British Pound went so high I almost couldn't come to the UK for university. That was the second crash I've seen. And then the 07 crash, when I finally got a job, and the 07 crash came just after I bought my property, and my property plummeted like 40-50%. I've seen it crash. And then on the 2016 oil crash, I almost lost my job, and then followed by the 2020 crash, and again I almost lost my job because of COVID-19. So I've seen a total of 5 crashes in my lifetime. It's so unfair. I feel so angry sometimes. But when I look back at my notes, the biggest fear I have in these crashes is I really do not want to miss out. I missed out for the last 3 times, and went in 2016, and this one, I'm not missing this train out because every time there's a crash, it will come back out. And also the fact that for me, my holding cash is 3 months because I can raise cash quickly. We can save. My family has gone through a position where we can save fast, we can earn fast. I hustle very, very hard. I try to make side cash. My wife helps with the expenditure. We hustle, we've saved up a lot of money. So this is the time that I'm going in big. So therefore, I'm not going to play the swing by selling Tesla 900 and then rebuy 500 and then go up to 700 rebuy. I cannot predict that. I've tried that in the past and I failed miserably, and I end up missing the train. I can give a long list of stocks which I missed the train again and again and again, and watching people retire early before their 40s because they own 5,000 Apple shares, they own 5,000 Netflix stocks, they've owned 10,000 Tesla shares, their friends owning 150 Ethereum coins. I've missed all that trend that I do not want to miss out, and that's why I am here today saying that I'm standing put. I'm holding AMD, Tesla, Nvidia, Apple, Microsoft, Fiverr, Pinterest. That's for my family. I'm holding also other Ethereum and DeFi coins. But this video is not really just me, okay? Me explaining myself on what I do on this crash and all this period, because I really do not feel anything. I don't feel anything. When this crash comes, I giggle, I laugh. It doesn't affect me in the house. It goes on. Life still goes on. This crash doesn't. I'm immune to it. But it's all about you. I just want to really share my point because I'm watching out for everyone here. So it's all about how much more can you lose. So case study one is, I want to see a V-shaped rebound. Okay, to see a V-shaped rebound, we need a huge correction further down. Okay, I mentioned about a potential recovery. I mentioned my videos about seeing VIX 30 again before it comes back low to the 7.3. When it hits the 7.3 low, perhaps things will get better. But it needs to go high up before it crashes back down. So case study one is, I hope for a quick crash, a quick correction, turnaround, whether now it's all about the FANGs. We need the FANGs to topple. We need the Facebook, Apple, Amazon, Microsoft. We need them to topple. We need them to fall hard. I need to see Apple lose all the way to 110. I need to see Microsoft drop all the way to 210. I need to see Amazon drop to 2008, 2007. I want to see them to topple that levels. Once they topple that level because they're the biggest holding, then we will see a huge, deeper correction, and perhaps we could see the rainbows at the end. So next one is my case study two. It's going to be a long one, okay? I'm going to replicate to see the data back in 2010, because it looks like 2010 all over again, where we had a financial crash for 2.5 years, and now we're going to recovery, spikes up so high early 2010, and then the market corrected. The market corrected in the likes of April after the earnings. Despite good earnings, the market was falling. As you can see the data there, the market was falling. When they recovered, it came back up around about August, September period, when they had the Q2 earnings, the second quarter earnings, and then they started recovering, and then there's October earnings, and they started flying and flying and flying, and that's where they recovered. But it looks like we might be going through another good 2, 3, 4, 5 months of slow pain. I just want to warn you guys, providing that the Q2 earnings are good, beating expectation again. If they don't, then we have to wait for the next October, November earnings. It sounds really painful, but I just want to warn you guys up front, for these stocks, it's going to go very, very slow the way down. Again, all about inflation, high multiple growth stocks, and this is where we are. Or the case study 3, like I think I may already mention, is if we have to wait until maybe to perhaps end of the day, the Q4 earnings we had January, February after Christmas, before they slowly recover. So potentially the economy is recovering, but the stock market might be going slightly on the decline before it comes back on the recovery upward. So we're seeing a very painful period for at least 2, 3, 4, 5, 6 months more if it's going to a really slow of death recovery for the tech stocks. I just want to be upfront and truthful with you guys. So there's really 3 choices that you can make. There's 3 choices at hand. Number 1, like me, buy on the dip, save up money, dollar cost average, and then also a small concentrated portfolio. Do like what I do, just ignore the noise, just buy on the dip each and every time. Option 2, what you can do is exit all your stocks now. But when you exit, you still have to be in the market. If all the stock picking is too hard for you, don't leave the market, but then go to index fund. Because end of the day, the likes of NASDAQ, FTSE, S&P 500, those stocks are actually double digit, okay? They're actually gaining from January, 1st of January, they're actually up more than 10%. Perhaps index investing might be the one for you, where it's minimal effort, just forget about it. And finally, the third one, I just need to be honest, if this volatility is affecting anybody, if this volatility is affecting you as a person, your well-being is affecting your health, then you should, I would say, leave the market. Perhaps stock investing is not the one for you. I just want to be plain honest up front, because I've got a text from my mate today, and he was saying that it's frustrating him, it's affecting his job. This is not right. The stock market is falling, it's affecting your job. The job is your mode, your first mode of income. If you lose that, you can't invest, you can't put money aside. So you need to watch out for number 1, this is your job, because your job supplies the roof over the head for your family, okay? And the next thing is, do not start using leverage margins, do not just taking credit card loans just to buy stocks on the dip, because you don't know where the real bottom is. So I really want everybody to invest safe. I really want everybody to think about it, what you need to do, your requirement preference. But this is my thoughts and my views of what I'm doing, and also hopefully to help you in guiding on your journey. Again, this 3 case studies is the worst case scenario that I can think of. Hopefully things can look better, but this is where we are by historical facts based on the 2010 saga scenario. Thank you very much. I hope you enjoyed this. Just click and like and subscribe. I hope to see you in future.
I hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Ding dong! More videos. Bye!